Hello guys, welcome back to my YouTube channel. This is the market outlook for the week of June 24th to June 28th. Alright, let's get right into it. I'm going to start off on the weekly time frame on the 5-year bond yield. I will not go as high as the previous video because not much has changed on the higher time frame in the bigger picture. So if you would like to see my top-down analysis all the way from the yearly time frame down to the daily time frame, you should check out last week's market review, which is the week of June 17th to June 21st, I believe. We're going to start out here. We'll start out with one of the things I like to do. I hide all my lines, all my drawings and levels, and I just look at the pure candlesticks. So look here on the weekly time frame on the 5-year bond yield. We've had price action bearish all the way from the middle of April or third week of April all the way down to where we are right now. We've had this push down, we've had this retracement, and this push down. Now let's look at the last 3 candles that we've printed for the 5-year bond yield. We had this candle that wicked after taking out this low, pushing up, and then we had this massive bearish candle down here. Now this candle closing within this candle is an inside bar, right? There might be different definitions for that, but I look at this as an inside bar. Now one thing you should know about inside bars or small range candles that are within wider range candles, this is a consolidation. It will be a consolidation in the lower time frame, of course. But what you should know is after we have small range candles, we have big range candles following, and after big range candles we tend to have small range candles. Like I explained in my midweek review last week, when we have this type of impulse, the likelihood of the next week being a small range week is much higher than it being a large range week, right? If you look here, a quick example, right here we have a big range and then we have a small range the next week, a big range the following week, a small range the next week, a big range, and it goes on like that. And of course there'll be times when the market is just screaming for higher or lower prices and one big range after the other. But what you should know is a small range is usually preceded by a big range. So when we have a small range like this, what this points out to me is this week will most likely have a big range. Now what direction is that candle going to move in? What kind of close, or where is most of the impulse of the week going to go? What do we expect to see? Now if you look at my midweek review, again referencing that review, there's no significant price action to show any turnaround yet from the 5-year bond yield. It looks bullish, but I have to wait for a significant break in market structure or some significant exhaustive pattern to show me that indeed price action is about to turn, right? So looking at the candlesticks here, we know we're most likely to have a large range week. Now let's go down to the daily time frame. Right here, this was the price action we had for last week. This was Monday, and then all the way to Friday. Let me bring up our other bond yields, 10-year bond yield and the 30-year bond yield. Okay, so looking right here, last week we had a divergence that we pointed out we'd like to study. I wanted to see if these diverged highs would get violated with all the high impact events that we had on Friday, but that did not happen, right? This is the divergence I'm talking about, the divergence between this high and this high, between the Monday high and the Tuesday high on the 5-year bond yield, the 10-year bond yield, and the 30-year bond yield. We had a higher high on the 5-year bond yield, a higher high on the 10-year bond yield, or a lower high on the 30-year bond yield. Going into the close of the week, we still respected those highs. We've not taken out those highs. Now, this is a very tricky place to be. For the bond yields, I have less of a conviction on the actual direction that the markets will go, but I would lean more towards a bearish week. I would like to gather more information Monday and Tuesday, and then during our midweek review, I would have a more definite bias, but I would lean more towards a bearish week. I would be looking at these lows to be taken out this week. From this turnaround and this press down we've been having, I believe that this level should be taken out before we have any significant turnaround. I believe this is what the market is aiming for. Right, let's turn on our lines and look at our levels again. Okay, so we tapped into this order block, but we've been pressing down lower and lower. After tapping into this level, I expected to see some kind of divergence or some swing lows or trade drive patterns or something interesting, something to tell me that the market is turning around, but I've seen nothing yet. And we're going into this new week with this consolidation behind us, and this level, it looks very good. It looks like a very good level for price to take out. So I'll be watching this level now, looking for some other confirmations as the week starts out to see if truly we are going to be selling. But if that's the case, then definitely I would look for price to take out this low. And if we are going to be selling into this level for the week, then of course my bias for the DXY is also going to be bearish. So let's look at the DXY now. Okay, let's look at the DXY on the weekly time frame, turn off our drawings and see what kind of price action we have. So starting out in April, same time as the high that we had on the 5-year bond yield, towards the end of April, third week of April, we had this bearish move, but then we've been pushing higher on the DXY. Contrary to what we are supposed to see, there's kind of a discrepancy between the DXY and the bond yield. So we've been making higher prices, and we closed this last week above the high of the previous candle. Now this in itself is a bullish signal. This candle closing above this candle increases the probability that the next candle will close above this candle, right? And we should have a bullish candle from the probability standpoint. This is just reading candlesticks with no levels or anything attached to it. Let's look at the daily time frame, so point out some things. Okay, so on the daily time frame, we see the exact same thing. This very impulsive candle, taking out this high yet again, and this is where we are right now. Same thing with this kind of close. The probabilities of a higher candle is more likely from the candlestick analysis standpoint. So like I said, because of the position the bond yields are right now, it's a bit sketchy. Going to be honest, it's not the cleanest or it's not the easiest market to read right now because there's that discrepancy. The bond yields are selling while the DXY is buying. So the market conditions are not the best right now to have a very clear bias. With that being said, I will still look for a bearish close or a bearish impulse for the week on DXY. Let's turn on our levels and look at it more closely. All right, yeah, we took out this high, all these highs last week, sorry, 2 weeks ago, and then last week we took out this high. But note the interesting thing here, we had a divergence with the Euro USD. Now a divergence on its own is not good enough to warrant lower prices. That's why I said during the midweek review I would have more confidence in my bias in the direction of the market. Right now I'm just telling you what makes most sense to me. Because of this divergence, as anticipated, actually I anticipated the Euro USD to diverge with the GBPUSD, but interestingly it also diverged with the DXY. So let me quickly pull that up so we look at it as we go. Right, so this is that divergence that I'm pointing out right here. We made a higher high to close out the week on the DXY, but we failed to take out this low to make a lower low on the Euro USD. That is a divergence, a higher high here and a higher low on the Euro USD. The moment I see a market structure break, that would confirm that this divergence is truly about to send price higher into this order block on the Euro, like we discussed last week, and into this order block on the DXY, also as we discussed last week. That being said, let's quickly look at the Euro, which would just be opposite of the DXY. Alright, so we have the Euro USD, and right here is that divergence that we have between the Euro USD and the GBPUSD. We also have a divergence here between the Euro USD and the DXY. So let me add that up quickly so we know exactly what we're doing. The DXY. Yeah? Alright, so we have a divergence here between the Euro USD and the DXY and also the GBPUSD. Let's quickly look at GBPUSD and compare it to this. Alright, so right here is that divergence between the GBPUSD and the Euro USD that closed out last week. There's a lot of signals pointing to the pairs being exhausted on this move and a very high probability of having a retracement going into next week. Now, these divergences don't matter if we are not in a significant point of interest. Now, what point of interest is that for the Euro USD? This other block that we tapped into here last week, and this push that failed to take out this low at the same time that the GBPUSD was taking out this low from last week and the DXY was taking out the high from last week. So this divergence happening when price is in this order block is significant. It's something that we should pay attention to. And because of these things I've pointed out, I expect a retracement into this level as we've been expecting since last week for this week. Now, like I said, it's a very tricky position that we are in. I marked out the high on Friday. A convincing break above this high would cement my bias that we are indeed going to make higher prices into next week to get to this order block, and then we'll start looking for reasons to sell. Now let's quickly look at the GBPUSD. This is that divergence we had between the Euro USD and GBPUSD. this divergence is not important until we tap into a significant point of interest. Now, this whole movement with this impulsive break, if you don't know how I pick out my order blocks, I explained it in a video. I would link it in the description and probably pop up something on the screen to show you what the video looks like, so make it easier for you to find. But then this is something I would consider an order block. A push down, an impulsive break. Because of how impulsive this break is, I look at this high as my reference. Just to briefly explain, if this impulse was weak and we started retracing right away, I would have looked for price to come into this level, and I would have looked for an order block either in this leg or this leg to hold price for higher prices. However, since we had this level of an impulsive push away from this high, coming right back into this high, I look at this high as a significant point to turn price around. So tapping into this level and at the same time having a divergence is very high probability for me. So same thing going into next week, I'll be looking at Friday high. I want to see a convincing break above the high on Friday to prove to me that indeed this divergence, this tap into this order block is valid and is enough reason for us to push back above this high, a retracement deeper into this candle to then send price lower. So I would mark this out as a level I expect price to break. Now I pointed out this level because after this break, I expect this level to push price back for a retracement to potentially continue that bullish move. Now, if we're going to be going bullish on the Gbpusd, how far up do I expect us to go? Now, the body of this candle, the close of this candle is a good level to look at. I'll be looking at this level to cap the upside on price. However, after this high is taken out, I'll be very watchful in case price doesn't get all the way into this order block. Once this high is taken out, I'll be very observant on price and see if there are any exhaustion patterns before we get to this level to turn price around. So pretty short and simple, maybe not too short, the video is a bit lengthy, but still short and simple. This is what I see going into next week. And that being said, let's quickly look at the economic data we have for this week. We have high impact events for Tuesday, Thursday, and Friday. On Tuesday, we have the US dollar consumer confidence. On Thursday, we have GBP, Bank of England, Governor Bailey speaks. We have USD GDP and unemployment claims. We also have USD pending home sales on Thursday, and on Friday, we have PCE price index and revised consumer sentiment for the dollar. So we have a lot of high impact events that I believe we should be able to capitalize off. So going into next week, my bias for the Euro USD is bullish as long as we can take out Friday's high, close above Friday's high convincingly. I would look to buy the Euro USD up until we get into this order block. Now for the Gbpusd, same thing applies. As long as we can convincingly close above Friday high, I would look to buy the Gbpusd all the way into this order block right here. And for the DXY, I am bearish. I'll look to see how we can close convincingly below Friday's low, and then I'll look to sell the DXY all the way to this order block. So yeah, that was a lot. I'm out of breath, but I hope you got all that. Going into the week, during our midweek review, we'll look again to see how we close below these highs and these lows that would confirm our bias for the week. And until next time, I wish you a splendid and a profitable week. If you watched to this point of the video, leave a thumbs up. Subscribe if you haven't, because why not? Share this video with anyone who you believe would find value in this video. And until next time, stay safe, trade safe. See you in the next video. Take care.